Richard Hunter, head of markets, and welcome to our look ahead for the week commencing the 15th of March. It's been a fairly big week in terms of the markets. The so-called American Rescue Plan, the $1.9 trillion fiscal stimulus package, which had been proposed by the new president, will now happen. Obviously, that has brought with it further concerns in terms of the economy, American economy overheating, and that in turn leading to inflation. These inflation fears, which have subsided slightly, probably on a temporary basis, have of course dogged the market somewhat over the last couple of weeks. There's also been another factor into play, which is the rotation between growth stocks and value stocks, and that's one that's been playing out in both directions over the current week. That being said, the US markets do all remain ahead in the year to date. In terms of the UK, of course, we got the GDP number for the January month, and although the figures showed a contraction of 2.9%, that was far better than the 4.9% which had been expected. Perhaps not surprisingly, the service sector was hardest hit, down around 3.5%, although the construction sector did actually manage to post a slight gain of 0.9%. In terms of January, of course, that was the first month when Brexit came into full effect. There were some fairly stark numbers in terms of the decline in imports and exports, but of course it's very early days to have a definitive read. There's some evidence that ahead of January there was some stockpiling, and also that by the end of January there might have been something of a recovery. So in the year to date, we've got a situation where the Dow Jones is up 6.1%, S&P 500 up 4.9%, the Nasdaq has recovered from being negative last week, it's now up 4%, and indeed the FTSE 100 is also up 4%. Looking ahead to next week, there's a couple of companies which might be of interest. We should have a trading update from Ocado. Shares have continued on their incredible run. They're up another 96% over the last year or so. Obviously pretty much split into two parts these days, with the retail side being the joint venture with Marks and Spencer, but it's on the international solutions side, the Ocado robots, where most growth potentially lies, and any updates on strategy will be welcome there, of course. Also, full-year numbers from the mixed drinks maker Fevertree, another stock which has had an extremely successful year, up 130% the share price over the last 12 months. Obviously, we've seen an increase in people mixing cocktails and drinking G&T at home, the so-called off-trade business. It's a question now, of course, when restrictions are eased, whether that growth continues over into the on-trade business. It's actually expected that revenues will be somewhere around £250 million despite the pandemic. And finally, Greggs, the bakery, full-year numbers, it's already said that it's expecting a loss of £15 million as opposed to a profit of £108 million in the previous year. But it should be served well, even so, by its value proposition. Look out for any update on its digital strategy. It had been mentioning home delivery and click and collect, and no doubt it will have something further to say. Thank you for watching. Have a great week.